It's your boy August BTC back again with another video. Today we're going to talk about Bitcoin portfolio update, how the account is looking, and are we on our way to $10,000, which is the goal. Just to show you how I trade Bitcoin options and now I'm trying to take my account from $1,000 to $10,000. So let's get straight into it, guys. So we've been seeing a major recovery. Well, I call it a relief rally for Bitcoin. We reached the bottom here at 57K, and now we're pumping pretty much very well. As I mentioned, we're still in the bear market because we are under the 200-day moving average, which is this orange line here, which is 74K. So if Bitcoin can reclaim this price action, right, and go above this line, that'd be really bullish. But I mean, we'll still be impatient. Yeah, so we're seeing a very good recovery. And same thing with Ethereum, a very nice bounce that we're seeing here. Still a long way to go. It needs to be at 2,200 before we can confirm that the bull market is back, which should happen, in the next few months, maybe towards the end of the year. So why is Bitcoin pumping? What's happening? But before we get there, guys, let's see here. So this is mainly because of President Trump. He's been giving some bullish, words on Bitcoin. This was yesterday. Trump says that, the US is taking over crypto. Obviously, Trump is a big, big crypto supporter, and this is the most powerful man in the world. And if he says something like this, the market will like it. Yesterday, Bitcoin went all the way to $64,000 actually. And so Trump said a lot of positive stuff. The White House also says that the US government is working to structure its strategic Bitcoin reserve and crypto stockpile, which is again extremely bullish for the markets. So guys, you need to be positioned. As I've been saying, guys, the bear market is where money is made. So I'm trying to position myself in this bear market and I'm going to ride this all the way up. So what I wanted to show you guys is this was June 26th, guys. My account was down almost 40%. 40% down, guys. It was just red everywhere. And how are we looking today? Here's the account, guys. We are in the green, and that's what I like to talk about. Full transparency, not sugarcoating anything. I'm not only showing you guys the winning position or the good positions, but I'm also showing you guys the losing positions, right? As you've seen, my account was down 40%, but now after a few days, a few weeks, we're back in the green, simply because we changed the strategy, we stuck to the strategy, we made a few changes here and there, and here we are, guys. We are printing right now. Currently, the account is up 13% on the day. We're still collecting $10 of theta each and every day. And the net premium that we stand to make for the news cycle, because I also entered a news cycle, guys. I'll explain it now. So we stand to make about $461 now. So in Rand, basically the account is up 13%. So that's about 6,000 Rand in profit. We are still collecting 162 Rand every single day that goes by. So we're collecting this in theta, and we stand to still make, in the next couple of weeks, we'll still stand to make about 7,000 Rand. So far, we're up only 76 Rand, right? So why is the account so green? Why did we do so right, guys? Nothing. We just stuck to the strategy. As you can see, Bitcoin on its own is up 2%. And like I mentioned, guys, I have a synthetic long position, right? So this contract is a contract that never expires. So it's like I'm owning the asset, I'm owning Bitcoin. I have about 0.14 Bitcoin, right? And each time that Bitcoin goes up, this price action goes up as well. All right, so that's the beautiful thing about it. So this is what I have here. My entry price here is at 60,900. That's when I entered, and Bitcoin is currently at 63,400. So from that movement alone, I'm up about 200%. Right, which is about $352 run in profit. In Rand, that's about 5,700 Rand, right? Just from this very small movement, guys, from 60K, so just a 3,000 movement in Bitcoin, and I've already made $300. Imagine what happens when Bitcoin goes from where it is right now, and it goes all the way back up to its all-time high, because that's the goal. The goal is for me to hold this position all the way to the next bull run, right, which is going to be above this level. So if we here right now, right, if I can, okay, no, we here 63. If I can hold this all the way back here, that's a 90, almost 100% movement here, guys, on Bitcoin. That's massive, right? Now imagine with the position that I have, I'll be making thousands of dollars, guys, thousands of dollars. Even if we go up here back to the 200-day moving average, that's a 30% gain. Remember, guys, I'm using portfolio margin. So that means the reason why the percentage is so high is because I actually use a very little collateral to hold this position. This is a massive position. This is 0.14 times this amount. Okay, the notional size here I have is massive. So I have 0.1 for Bitcoin. And currently I'm up, about 200%, which is great. So I'm going to keep writing this up. The account is green, which I love. So we have this position that's participating in the upside. It's participating in capital appreciation. So for every time that Bitcoin goes up, this position is printing for us, okay? But if Bitcoin crashes, I'm always talk about a risk management. What do we do for a risk management? If Bitcoin crashes, this positions helps us on the downside, right? This is a long put where I paid money. So I consider this paying for insurance. So I paid money, right? And if Bitcoin goes down, this position basically protects us on the downside, okay? As you can see, the days to expiry now is 51 days. Before it was about 24. And I've said that when we get close to 21 day to expiry, that's the optimum time to just reset the portfolio and jump into another cycle. So the next cycle, the previous cycle was July, and the next cycle, as you can see, guys, is August. So we're into August right now, August 28th. That's when these positions will expire. So I have 51 days. The good thing with doing this is because I don't have gamma doesn't work against me that much, meaning the price action on the options is very slow, which is pretty good for me, and that's what I want. Right, I don't get really pressured. And it's really good for the portfolio as well and for maintenance margin as well in a nutshell. So I have this long put that's protecting me on the downside. But then if Bitcoin does nothing and if Bitcoin stalls, what do I get as income? I still want income. I still want to be paid as each day goes by, and that's why I have the short put, one short put, and I have three short calls, right? Because we're in a bear market, the number of calls, short calls that I have is higher than the short puts, okay, especially on Bitcoin. Because like I said, we're in a bear market, we haven't confirmed that, we in a massive bull market. So the chances are Bitcoin might still go down than up. So for that, I'm still betting that Bitcoin might go down in the short term. That's why I received $100 here, $131 here, and $108 here. And I'm getting paid by it each and every day. I'm slightly up on the positions. And all of this went to this net premium, okay? So this is basically paying me if Bitcoin goes down, right? So this is a short course. And then what I have here is I have a short put. This short put is basically like how can I describe it? It's like it's a tactical position because we're still in the bear market, so I only have a one short put. I don't want to be too aggressive on a short put until we get into a bull market. So I have this short put to basically help me fund the rolls for the short call. So what do I mean by that? Let's say Bitcoin pumps right all the way to 69K and test this side. My short put will be in massive profit. So when I'll decide to roll this position down, right, this I'll be paying a debit, right? So I'll be taking a slight loss on this position. But then if I roll this put, it's going to help me fund for the debit, essentially cover the debit for this particular position, if that makes sense. So I know it's a lot, but you have to learn the mechanics of options when it comes to rolling for debit and credit and things like that, and you understand what I'm trying to say. But so far we're printing. So the strategy that I've built basically helps me print in any direction. Bitcoin goes up, I print on the capital appreciation. Bitcoin goes down, I print on a long put because it protects me on my downside. Bitcoin stays sideways, I print on the short puts, and then the three short calls, and I'm getting paid for that. So that's the strategy, guys. A very beautiful strategy that took me long to, to create, and also took a few losses here and there to kind of build it. But so far it's working. Same thing for Ethereum. I have the long put appreciation. Long perp appreciation for Ethereum, one Ethereum. Currently we're slightly down because our entry was slightly higher. I had to restart this position. So my entry is 186. Ethereum is slightly under. We have the long put for our protection on the downside. We paid $20. So if Ethereum crashes, we already have our max loss. Also, another thing that I need to explain. What I have here is called the bull put credit spread, I believe, what I have here, right? So when you have something like this, guys, it's very important, right? Basically, a bull put credit spread, if I'm not mistaken, The way it works is you sell a short put at a high strike and you buy a long put at a low strike price, so 56.55. So by so doing, guys, you have a defined max loss. You have a defined max loss, meaning Bitcoin can go down to zero, right? Bitcoin can go down to zero and my max loss is defined. So let's say my maximum loss if Bitcoin goes to zero is $90, and that is what's going to happen. So Bitcoin can crash to zero, and the maximum loss that I'll have because I have the strategy is $90, right? Because the way this thing works is it looks at the distance between the two strikes. The distance between the two strikes here is about $1,000, 56 and 55,000, right? So you take your $1,000, then you multiply with the quantity, right? So the quantity that I have here is 0.1. So you take $1,000 multiply by 0.1, that's $100. Now you take that $100 and then you subtract it with the credit that you received. So if you subtract this and this, I think the credit here is about $6 in profit. So if you take the 100 minus 6, that's about $92, $91. So now you know your max loss. That's the beautiful thing about the strategy. So it's the same thing that I'm employing here. That's why this short put is important and this long put is important. It always needs to stay in my portfolio, especially when we're in the bear market, right? That's something that I've also recently, discovered, and I was doing it wrong. So now, same thing with Ethereum. If Ethereum crashes below 1.5, it goes to 1.4, 1.30. The max loss here is known. Okay, the max loss here is known. So you can just do the math. So you do the difference between these two strikes, and then you the difference between the credit that I received here between $20 and 24 is about $4. So the difference between these two strikes is about, I think, $50. So 50 minus 4, right? You can do the math. It'll give you about 45, 44, 45 dollars, which is a max loss that I already know here. You see, so that's a beautiful thing here. So if Ethereum crashes, I'm only losing about about $40, $45. But if Ethereum goes up, I'm profiting here. And then if Ethereum crashes, the max loss here is $45. But then my short call is going to profit because when Ethereum dumps, the short call prints. So I know it's a lot of jargon, a lot of things that I'm speaking here, but you have to be familiar with the world of options, guys, and do your research to be able to understand what I'm talking about here. I will probably do a guide, in-depth guide on how each positions work and how I run the portfolio. But this is basically reprinting. We're really, really printing. I like to see the whole account P&L to be in the green. We're on the right track. If you go to the account summary, we are on the right track. What I want to show you guys is that we are just forming higher highs and lower lows. This is exactly what I want. Higher highs and lower lows going up to the right. Going up to the right. That's exactly what I want. So we need to reclaim this level here, right? This level here, we need to reclaim this level. So if you zoom out 3 months, so we still have a long way to go. We definitely need to reclaim this level here, all-time high of the portfolio. So we're getting there, right? We're forming higher highs and higher lows. So that's basically it, guys. And obviously this is the position, so we're doing pretty well. I'll keep you guys posted, on the next video. If you guys like the content, the goal here is just to get to $10,000 and we'll be getting there soon. We just need to stick to the portfolio, stick to the process, stick to the strategy, and we'll get there. But yeah, if you guys like the content, feel free to drop a like, comment, subscribe, and I'll see you guys on the next one.